I'm Bryce Butler from Access Ventures, and this is More Than Profit, a show where I talk with founders, investors, entrepreneurs, and leaders of all kinds about living and working with purpose, how they do it, and why. So my guest this month is Alex Lazarow, and he spent his career working at the intersection of investments, innovation, economic development in both the private and public sectors. He's also an author. He wrote a book, Out Innovate, How Global Entrepreneurs from Delhi to Detroit Are Rewriting the Rules of Silicon Valley. He's a professor, Kaufman Fellow. The list goes on and on and on. Alex is he is a thought leader in this space. And when I say this space, his space is actually rather broad, from tech to investments to impact. He's done a lot of different things in his career, from the Meteor Network to now his work with Cathay Investments. But before we jump into kind of what you're doing and seeing in the broader landscape of the global economy, I'd love to know, you grew up on the prairies of Canada. So what was it like, and how did you find yourself, doing the work that you're doing? Pretty impressive degrees, but something kind of helped move you in that direction. What was that like, and what was that for you?
So first of all, thank you so much for having me, and really excited at the conversation. I've always been really interested, like you said, this intersection of innovation and economic development, and this tool of finance came later. When I was in undergrad, I thought I was going to do a PhD in developmental economics, and I grew up in a small town in the middle of the country. And I had this opportunity to go work on the Canadian version of Wall Street, Bay Street, doing M&A investment banking. And while I was not in love with selling Canadian insurance companies, I was in love with the tool of finance. I found it a powerful tool. And this was, by the way, at the time when Mohamed Yunus had just won the Nobel Peace Prize, impact investing was beginning. And so I decided, instead of going to academia, I would go do my MBA. And I came out of that with this thesis of investing for good. I realized I had no discernible skills, and so before going to an investment firm, I ended up, a lot of the things I care a lot about are in highly regulated industries like financial services or healthcare, et cetera, and wanted to understand how that world worked. And so I ended up working at the Bank of Canada for a bit, and then later at McKinsey doing consulting, mostly in emerging markets, mostly all over the world. And kind of after that, for a while, I had the opportunity to join Meteor Network in California. I was the first hire on a new financial inclusion fund, and that was about a decade ago. And fell in love with this early stage venture investing, but really at the intersection of startups that are going to scale and startups that have impact really built into the core of the DNA and the operations. And so that's what I do today and was doing there.
That's cool. And so, even growing up before Bay Street, like, was there anything? How did you, what kind of lit the fire for you around innovation and technology, or just innovation in general? Like, what was there a teacher? Was there a family member? Was there, was entrepreneurship just part of your upbringing, or like, what was that like for you?
Honestly, I'm not sure there was one moment that got the fire going. I think it was a progression. I think that when I was in undergrad, I was interested in the tools that could drive economic development, and like I was in university during some of the growth in early tech and things like that, and so I was seeing that as an outsider, right, not living in there. And then progressively, my career got closer and closer until metaphorically and physically, I moved to Silicon Valley, and I think that here, like, the lens on the world that we have is of tech. But I lived in DC before, and there the lens of the world was public policy, in Brussels before that. But I think I came into the world of tech with that being the tool. But I think by the nature of the fact that I've lived and worked in a couple of these different contexts, honestly, I'm a venture capitalist. I'm perennially optimistic, and yet I think I bring some skepticism too. Of, look, tech is not a panacea. And some of the biggest problems in the world will be solved with innovation in concert with regulation and public policy and government funding and the nonprofit sector, and a lot of these things coming together. And Bryce, a lot of things that you're thinking very deeply about and using various forms of capital. And I think I've come to that by having done a portfolio of activities in my career, and then choosing the lens where I'm going to spend most of my time around tech and investing.
And I think, and I love your language, investing for good, like coming out of your schooling and then going to a mid-ER, but it's fascinating, you're a venture capitalist, you work at a massive global firm, but you also have this other thread of impact investing. I'm curious from your vantage point, like, what do you think about the world of impact investing? Ross Baird and I, mutual friend, talk about this all the time. Like, what is the inevitable future reality of this? Are we creating an altogether different industry, or is there a goal with this? Like, what is impact investing? Investing for good is good. It's good language, but what does that look like from your vantage point?
It's funny, right? Because I worked at ON for a while doing impact investing, and now I work at a traditional venture fund and growth fund where we're not quote unquote an impact investor. I consider myself a closet impact investor. Every investment I've done, I would have been delighted to have done at ON, and it just happens that I believe that some of the biggest problems in the world are also some of the biggest massive markets, and if you can solve it, you can do something interesting. So I'll caveat it with that I've been an impact investor and a closet impact investor. I have mixed feelings towards the word impact investing, where it used to be this kind of other. There was investing, and then there was quote impact investing, and I think that in some ways it's similar to fintech, where there was technology and then there's this other thing called financial services technology, and today. I think the lens is much broader, right? Where impact investing, just like fintech is mainstream, it's everyone's looking at it. Impact investing today is actually a lens, an approach that you can do public market investing with. You can do private market investing. You can do real estate investing. You can think about these multiple stakeholders, and so I actually think we need. I personally think we need better language around what we're doing. Because there's a lot more breadth and depth to this than when the sector started, a little bit over a decade ago.
And I have to believe some of that's due to just the growths in how do we measure this, how do we define it, and I think consumer education, a more aware consumer that's actually forcing some of this and more transparency. So it probably happened faster than some might have thought, but I definitely think some work on defining terms would be helpful because I do think, where I sit in Louisville, Kentucky, impact investing is a 4-letter word, because if you're an investor, it's perceived as a concessionary investment only. Like you're only ever you've got to concede it. You can't have both. You can't have impact and good returns. And I'd love to have you, talk about like all the work you're doing now at a venture fund, a traditional venture fund that's global, the things that you're doing that you would have also done it at ON. That's helpful to hear because you guys you're not making concessionary investments at Cathay. You're doing real venture investing. And so I think that's the thing that I'm always bucking against in mid-America, specifically in some of these flyover states, is this this world that language really, really matters. And when somebody hears that word for the first time, who are they hearing it from? And so here, people hear impact investing mostly from the nonprofit sector, foundations that are maybe doing program-related investing, and then that becomes what defines that term for them. So.
Yeah. Well, I'll give you 3 examples in America, 2 of which
that'd be great.
2 of which not from California. But before I do, the way I think about kind of the lens on which I think about impact, in my book, I talk about this concept called MMAs, multi-mission athletes. Mm-hmm. And I use this word, right, of MMA, thinking of mixed martial arts, right? But it's really using multiple skills towards the same objective. But the businesses I love are the ones where the operational outcomes of the business and the financial incentives of the business are directly aligned with scaling impact. Yeah. And I think that when that happens, and when you can build a business that can scale really well, but where those incentives are very aligned, you can actually have an incredibly successful and incredibly impactful business. So let me give you 3 examples of companies I've been delighted to have had the opportunity to invest in. The first is Chime. It's actually how I got to know Cathay. I had invested in Chime when I was at Omidyar Network. Cathay had led the B. Chime Bank is a leading digital bank, fintech company in the US. They essentially make money when customers make money. They make money when you swipe your debit card. When you use the bank account, they get paid on bank interchange. They have no overdraft fees, very transparent pricing, digital top app to be able to use it, etc. But where the impact is really tied to the outcome and very, very targeted to a customer segment that was underserved, and really the mass market in the U.S. So that's one. Another company is Sidecar Health, which is a health insurance company, and they have a different twist on how health insurance works. They say we have a specific benefit that we offer X dollars for Y thing, and as a patient, you then have agency and control over the health you want if you go anywhere you want. And by the way, if you choose to get care at somewhere that's less expensive, you get paid the difference. And if you choose to get care somewhere more expensive, you can pay a little bit more, but you have choice. And they give you the tools to make those choices. They give you an app, and you can see the cost of all the drugs in the neighborhood, in the area, and a card where you swipe and you pay. And in real time, it helps solve some of the friction there. And the result, by the way, is that the cost is much, much, much cheaper than all the other health plans you can get insurance from. And so they work when people keep renewing them and keep using them, and also do this behavioral work around switching. And then the last one I'll mention, which is an Austin, Texas-based company, it's called Zen Business. And they're a single pane of glass for small businesses. They help form your LLC, but because they know where you live, what you do, who you are, with a couple clicks, they can open up a bank account and send your first invoice, or help you buy a domain name. And they've done 1,000 doctor websites. They can help you do a really, really good one for that, and everything else. And they succeed when you use them over and over for a lot of services, when they really provide value. And by the way, they've helped form so many new small businesses in the US. And so those are examples of businesses where I think the operational success of that business is very tied to the impact, and it's targeting a customer segment that I think you and I care a lot about. And anyway, so that's
and the other thing I love is, because like Steve Case would say, for it to be impact, it's got to be measurable and actually measured, right? That's reported and transparent. But for the success of those businesses, because it's so tied to their business model, like they're going to measure that data. Sidecar Health, they're going to measure the number of patients served and the amount of money saved by those patients, because that's part of their business model. And so therefore, it's going to be measured. So there's this value that it's so tied to who they are as a company. And I love what you did there, which was bring in examples, because I think sometimes we live in this theoretical, wouldn't it be awesome if, but you brought it to 3 concrete examples of companies across the country in different industries that are doing exactly what we're talking about, building a business to serve people and to do it while also getting return for investors. I mean, I love that. That's great.
But by the way, and thank you. But by the way, I will say, I'm also lucky in the sense that, but it's impact lens. I'm lucky that I'm a fintech investor. I do mostly financial services and health. But in financial services, right, there's a lot of academic research that says you give people better ways to save, more affordable ways to pay, lower cost credit, access to banking, right? There's a lot of academic, rigorous research that says you do that, therefore you have these social and economic benefits. And therefore, we can measure, how many people get banked and what's the effect on credit? And those are very operationally tied things. It's harder in other sectors. In the sense that, ed tech, for instance, you might say, hey, I'm going to build a school and get kids in school. That's not impact. Impact is kids learn, and school is the means by which you do it. And so there's still a gap of whether or not the schooling method, or if you're doing an innovation with digital or whatever it is, it can be harder in other sectors. I think so. I caveat my comment.
Sure, and that's a really good point too, because I think oftentimes there's two sides of that. One, the entrepreneur making sure, what are the outcomes, versus the outputs. It's not kids getting education, but are they learning? And so then really drilling into what that means and how you might measure that. There is a cost there, right? A cost to the entrepreneur to do that. And so who bears the burden of that cost? And so I think even as an impact investor, really, really trying to understand what is that burden we're placing on these entrepreneurs that are already strapped for time and cash. And so being sensitive to all of this additional reporting requirements because we're impact investors, quote unquote. So
I will say one thing, ed tech is not my expertise, so I'll put that one aside, but I will say this world of innovation and giving space to do this for entrepreneurs is something where, as a community and ecosystem builders, and by the way, the government regulators, I think there's room to play. And I'll give one example, which is regulatory sandboxes, which is saying, hey, I've got this new idea of a product or whatever. It's totally different than anything we've seen before. one of the things that could be a natural instinct is that doesn't fit in a box, let's not do it from a regulatory standpoint. But a bunch of countries around the world, like in the UK or in Singapore and elsewhere, have created sandboxes to say, hey, within this box of X customers and these parameters on the product, you can do a bunch of stuff. And when you get to a certain size, we will revisit together on what has happened. I think figuring out ways to sandbox innovation to make it cheaper, to try and more affordable, I think can also catalyze innovation in the impact space. So I think those are areas where we're still in the first or second inning on what's going to happen. I think we're going to see more.
Yeah, and I think kind of segues into I just read a post from you in Forbes about Money 2020 and just kind of how financial inclusion has come mainstream. And so, because you've been in it for the last decade plus, financial inclusion. So talk to me, like, what do you think are the reasons for that? Is it because banks have grown in empathy towards their customers? Is that or what is the reason that you think there is now this awakening to the need for more technology solutions to include those that have otherwise been excluded for several decades?
Well, so first of all, I don't believe it's an awakening in empathy from the banks.
I know, there's a little lead in there.
It's interesting. So when I started doing financial inclusion, fintech investing, there were about 2.5 billion people that were unbanked around the world. Like that was the stat. And then call it 1x that on top of underbanked. And over the last decade, I think the last survey, the World Bank runs a thing called the Findex, and it was like 1.5 billion. So basically, like between 500 million and 1 billion people have gotten more access to financial services over the last, call it, decade or so. What has changed? I don't believe it's the bank's empathy. I think what's changed are new business models and new technology. And those being proven, which has brought in a lot more interest in the space. When I started investing in fintech, it was a sideshow. No mainstream funds had fintech investors. There were a couple little funds like ours at ON and a couple others that were specialists in the space. Today, the largest category of unicorns around the world are fintech unicorns. If you had asked me a year ago, in Africa, for instance, in sub-Saharan Africa, there had been one unicorn cumulatively, private tech unicorn cumulatively. This year, there are 6 new ones. All 6 are fintechs. So What has happened is fintech has really become a power to include people, but also to build really, really big businesses. Nubank's IPO, for instance, in Latin America has really catalyzed interest in that market. And the reason it has is, for a bank, it is super expensive to serve a customer that has no balance or low balance and is using it very infrequently. And that's why, for instance, overdraft fees have become such a $30 billion industry in the US. But with tech, all of a sudden, you can serve a low-value customer, low-value, quote-unquote, right, in the sense of having low balance or low usage or what have you, much, much, much more cheaply, and then do it for much, much more. One of the biggest drivers in the number I quoted for you was in China. And it's where things on the back of WeChat and et cetera have also brought people up the bank curve. And so I think it's unequivocally the rise in interest in fintech, but essentially the rise of using technology in this regulated space to serve customers well to the needs that were heretofore not served before.
And so what are so I'm assuming like the regulatory sandbox could be one tool, but what are some other things that the fintech community can do as it thinks about broadening opportunities for the financially excluded? Like how can we continue to, ride that wave, if you think about it, and really see more people have access and agency as they enter into the economy?
Yeah. So 3 thoughts. I think one, definitely on the ecosystem enablement side. That's a big opportunity. The second is cross-pollination of ideas. I think where I've seen the biggest success is there's 1 or 2 or 3 ideas every year that are really transformative, big businesses. And those can be successfully scaled by different entrepreneurs or perhaps by the original business in different geos. Like Udaan, for instance, in India, a couple of years ago was the fastest ever company to become a unicorn. What they do is they allow these small little mom and pop shop merchants in India to have access to Amazon-like inventory, plus financial services, a ton of it. And now there's a bunch of these companies around the world. So it's the best ideas are coming from anywhere and scaling anywhere, and it's getting that inspiration and supporting those entrepreneurs with capital, with people, with all that stuff. And I think the third You talked about the banks. I actually think, I think in Silicon Valley, we often have a tendency to say the future is only with the tech companies. The reality is, and in America, for instance, America has this incredible long tail of traditional financial services, credit unions, local banks, etc. I don't think these folks are going away. They have really unique relationships with their customers. They serve them well, etc. But I think they do need tech to modernize their stack. And so I think that it's how do you actually bring incumbents and technology players to work together to better serve customers. And so I honestly think this will be a multifaceted solution with many players around the table.
Yeah, and I think that's good. And I think, you mentioned earlier, that the banks aren't necessarily more empathetic, but it did remind me of like the Cathay predictions for 2022. One of the things that you put in there that the future of tech is more empathetic. I'm curious, what did you mean by that, and what can we hope to see in 2022 and beyond? Because I do think with COVID and just the politics of our time, I don't think that's the first place most people would go. So I'm curious what you meant by the future of tech is more empathetic.
I think that what is happening right now, and that's part of the news, is automation, right? It's that we're taking a set of medium complex tasks and automating them with a bunch of, UiPath, RPA, kind of robotic process automation. We're doing that at the white collar. We've been doing it to a bunch of other things with robotics in general. I think that's kind of a train that's going to continue going. But I think that what it means is that we'll need an interface with customers and an interface with employees and things like that that is more empathetic. Think of all the times you go on a website and the automated chatbot goes and you're like, oh God, right? Like, I think that what you want is like a better, more authentic relationship with customers. And I don't think a machine does that. I think a human and a machine can be massively augmented with tech. But I think that like this human connection is important. And I think that's true along the stack. And so I think that will be a big theme of how do brands, how do customers, how do employers relate, connect with their community, particularly in this age of, we're both doing this, working from home in this COVID era. I think human connection is going to be very important. Those that figure that out and figure it out authentically and well, I think will benefit from it.
No, I think that's good because this whole future of work thing and automation, and it's good. I mean, on one hand, I hear everybody it's inevitable, it's coming, and we just need to figure out how we're going to upskill workers and get them ready for this future economy. And I think that's good. I think the other question is, at what cost? And I think your admonition towards empathy is a helpful one, because I think the ones that figure out customer connection, still that kind of human connection, where machines are then augmenting that versus replacing that. I think where I sit in Louisville, Kentucky, with tons of manufacturing and generally an economy that's depressed and needs to be reimagined, it's how do we stay competitive? And then we also oftentimes don't talk about the human behind that decision. It's like, let's just be more efficient. So I think that call to kind of empathy and human connection is real and really something that's needed right now, given COVID and its impacts over the last couple of years. So
we also just need the conversation around that topic.
Oh yeah. Right? Yeah. I mean, I think having that conversation and saying like, let's build better, efficient, more efficient systems, because if that's the case and we're not at work as much and we're able to spend more time with our loved ones, that's a good thing. But if it's replacing that human connection versus augmenting it, then I think we need to have another conversation. So
yeah. No, totally.
In your book, what I really kind of wanted to close out our time together was with around what you're seeing and what you call kind of like these frontier economies. Like, so you're reimagining this model that Silicon Valley has kind of put forward, the gospel of Silicon Valley, so to speak. And you talk about these frontier economies, these frontier ecosystems. And I think it's really, really helpful. This is how we got kicked off at a startup week in Louisville. You and I did a discussion. And I think it's super helpful because in my seat, everybody looks to Silicon Valley, or at least they used to. I think people are starting to question that model. And like, how do we get the next Facebook? How do we become the next Silicon Valley? And I think that's the wrong question. And I think that's what you're also addressing as well. So talk to us about the false narrative of this Silicon Valley gospel, and you live there. I mean, you're there, you work there, so it's not like the enemy, so to speak. But what is it that other communities should be thinking about and doing in these frontier ecosystems to build competitive, lasting, kind of beautiful communities that people want to be a part of, and they don't have to leave their home to go to San Francisco?
Yeah, and maybe I'll just frame it with why I wrote this book. And I was observing in my day job as an investor in startups outside Silicon Valley, but also teaching a class on entrepreneurship, of global entrepreneurship, there was no material about best practices, about how to scale startups in ecosystems with less capital, with less depth of been there, trained startup human capital, with more macroeconomic shocks, just honestly with an entirely different context. And I chose the word frontier because we often associate California with this Wild West. But today, California is the establishment. This new Wild West of innovation is around the world. And I believe it's where most of the innovation is going to happen in the future. Not because Silicon Valley will necessarily go down, but because everywhere else will rise. And let me put that into context. Today, 91 startup ecosystems around the world have created $1 billion business. 91. These aren't just big businesses. These are the biggest businesses. The biggest neobank in the world is in Brazil. It's Nubank. The biggest RPA, robotic process automation company, we were talking about a second ago, is from Romania. UiPath, the biggest e-commerce enabler, is from Canada. Shopify. The biggest edtech is Indian, Baiju, and the biggest social network, the biggest social commerce, etc., is in China. And so that's how innovation is happening today. And no one was telling the stories of these entrepreneurs, and so I decided I would. I interviewed 200 founders, the founders of the biggest startups around the world. And I think that taken together, their best practices offer us an alternative playbook to how to build startups. One that you say, it can be global from day one instead of just looking at Silicon Valley or the US. You can build distributed teams, which by the way is now best practice with COVID, has been best practice for a long time outside Silicon Valley. You're going to be creating markets instead of disrupting them, and all the things that go with the strategy. I mean, a bunch of other these approaches. And so my advice to ecosystem leaders and to founders is say, look, what's happening in Silicon Valley should be an inspiration, but actually take a second and look at what your peers in ecosystems that look more like yours are doing and how they are succeeding, because there will be more relevant. And I think the analogy for me that resonates the most is the car industry. 100 years ago, the innovation of the day was not software, it was automobiles, and the capital of innovation was Detroit, not Silicon Valley. Fast forward, what happened? Innovation globalized. Today, the capital for the most reliable cars is Japan, and raw engineering might be in Germany, and the sexiest sports cars might come from Italy. And the capital of electrification is arguably with Tesla in Los Angeles or Shenzhen, right? And so innovation is globalized, but also it is specialized regionally, and best practice has moved elsewhere. And by the way, just-in-time manufacturing came from Japan, is now best practice everywhere. And so that's what's going to happen in the world of tech as well. And that's why entrepreneurs, ecosystem builders, nonprofits, investors need to also learn from what's happening elsewhere.
Yeah, and that was actually going to be my next question. So, because I think the other side of that is, okay, innovation's happening and decentralizing and the frontiers, but capital still is seemingly concentrated. What are you seeing? How is capital being reimagined, and how do we get some of these nascent players, arguably foundations, if you think about it, in communities across the country that have endowments? How do we get them to think differently about participating in these frontier economies in ways that actually spur both economic and community development, that the things that they're after on their grant side could also be achieved through better jobs, better opportunities, better businesses? Because I think where I sit again in Louisville, that's been one of the biggest things is capital, because the pillars of capital are still, from a venture perspective, Silicon Valley, New York. And so if you're not present with those capital providers, it makes it a lot more difficult. So what can we do in these frontier economies? What should we be thinking about to build more innovative capital to support growth?
Yeah, so I will say, one, the good news is that a byproduct of the pandemic, hopefully will be a continuation of what's been playing out, is that investors are looking much more broadly than they were before, investing via Zoom, et cetera. So I think one is capital might still be concentrated, but it's also being more distributed slowly, but that's happening. But I actually think there's a couple of things we could do. One is local players, and there's a lot of capital across the country, should think about their investments differently. And one of the, for instance, foundations, I think that using the corpus to mission line investments, and I know this is something, Bryce, you're thinking a lot about, I think is a really powerful way of aligning impact on the private investments with the mandate of the philanthropy, bringing corporates to the table to invest alongside VCs in their local economies. Because one of the things that's going to happen is with tech will be regionalized based on local strengths. And we'll see places like Minnesota continue to be really great in healthcare because it's a great ecosystem for that. Or Estonia around e-government because they've done a nice job there on that. So bringing the different players to the table. And then lastly, something I think is interesting is I think there used to be the venture model, 2 and 20, traditional preferred equity, or you could get venture debt or whatever. And I think we're going to see some blurring of the lines. We're already seeing it in venture, right? Where, there used to be a traditional seed round and a traditional, and like now those metrics are flattening out. It's less clear what exactly, there's more of a continuum. But also, the rise of alternative investment structures like revenue-based financing, which, and there's now a bunch of big players that have emerged doing that, which is an alternative or a complement to venture capital, and a rise of more venture debt options, and other things that are popping up. And so I think we're going to see more of that. And the net beneficiary of it will be tech outside of the Valley because they're the ones that have had less historically. And so I'm terrifically excited about it.
Yeah, and I think that's a good word to kind of close out on, because we some of the work we've done here, we have a partnership with WeFunder, for example, and what we realized is people didn't even know what crowdfunding was, even though it's been approved since the Jobs Act of 2016. And so it's been possible to do it across the country. But what we did is we built more of an incentive. We built a small regional strategy where if you're raising on a WeFunder campaign, we'll match to try to incentivize more community participation. And so that has helped. But I think, how do we take that and replicate it in other markets? How do we expand it? I think the Reg CF change was really, really interesting to where now you could raise $5 million on a crowdfunded equity platform. And that was really, really neat to see, like even Mercury, a fintech company out of the Bay Area, opening up $5 million of their round on a WeFunder because they wanted their customers to win with them. So I think, like you said, this leveling of the playing field on venture, but also allowing community people to participate is a really cool new future, I think, for communities across the country. It's
a big deal, 100%. So I'm excited to see a lot more of this in the coming years.
So what if I could go out with one final question for you, give you the last word? I like to sometimes ask, like, what are you excited about and what gives you pause? And pause meaning like it could be a regulatory issue that we've got to fix. It could be anything. Let's start with the negative and end with the positive. So as you think about 2022 and beyond, what are you pressing into that you feel needs to be changed or addressed or continue to press forward that we need to solve as a society? And then what are you excited about? What are you really jazzed about, looking forward to?
I'm going to give you the one thing which will answer both sides of it, which is
okay. There you go.
I think we're at inning number 2 or 3 about the rise of tech everywhere, and I think that is terrific. I'm also a little worried about an influx of capital and not enough places for it to go, and the rise of valuations, and with valuation expectations of everything. I think we're going to see way more outcomes. I just don't want. I just want this to be a sustainable ecosystem development around the world, not a bunch of one-hit wonders. And I just want to make sure we're thinking very thoughtfully about how to build the flywheel in a bunch of these different ecosystems. And so it's two sides of it. But I'm really excited. I think we have not necessarily a smooth ride the whole time, but I think the long-term trend is going to be in the right direction over the next few decades, and I think that's a terrific moment to be doing this work, and for us collectively to hopefully move the needle forward.
If you haven't already, you will want to pick up Alex's book. We have a link to it in the show notes. Alex is a prolific writer, and you can follow along with him on Substack. A link is in our show notes. And finally, you can also follow him on Twitter at Alex_Lazarow. As always, stay up to date by subscribing wherever you get your podcasts. And while you're there, drop us a review so others can find us as well. More Than Profit is a production of Access Ventures. Direction, design, and editing is done by Render, a public benefit innovation as a services corporation in Louisville, Kentucky. To learn more about their work, check out workwithrender.com. I'm Bryce Butler with Access Ventures. Thanks for listening.